Well, it was a plan described as nonsensical, and now the fallout from President Trump's trade war is being called an annihilation. 160 billion wiped off our stock market in 10 minutes, our super balances smashed. We're in uncharted waters and no one's really sure what's going to happen next. Economist and former Treasury official Leith Van Onselen joins me now. Leith, just give it to us straight. How bad is it?
Yeah, look, it's pretty brutal out there, Ali. So the ASX 200, which tracks the 200 largest shares in the country, that fell 4.2% today. Now, that was the biggest one-day fall since early in the pandemic in May 2020. And nearly 110 billion of value was wiped off Australian shares today. Now, the ASX 200 has fallen for 3 consecutive days, and it's down about 8% over the past week. So it's obviously not a great situation for all of us who have super balances. And, what happens tomorrow, we'll have to see what happens on Wall Street overnight, and the market will take the lead from Wall Street. So if Wall Street has a bad night, the chances are we'll have a bad day tomorrow and vice versa.
And Leith, I mean, this is all off the back of a decision one man has made. How does that send the world into a meltdown?
Yeah, look. Obviously, the United States is the biggest consumer market in the world, and it is it was the leader, I guess, of the free world. And what the US has done is its tariff increases have actually increased the US average tariff rate to its highest level in more than a century. And we do live in a very globalized world whereby supply chains are all over the place in all different countries. And it's really thrown a spanner in the works, and it's upset the world order.
But I mean, can you believe what we are seeing right now?
Yeah, look. Certainly, Trump's doing what he said. So he said he was going to introduce tariffs, but I don't think anyone expected the tariffs to be this brutal and this ad hoc. So effectively, the way that President Trump has implemented the tariffs is he's basically looked at the trade deficit of the US and said, and with countries that have a bigger trade deficit, he's put on a very big tariff. Countries like Australia, where America actually has a trade surplus, he's only put a 10% tariff, but it's very ad hoc.
So if you just look what's happening here, right, and I really feel for retirees at the moment, do you think this is just a blip or is it much bigger than that?
Look, we are in uncharted waters. So we haven't really seen this before. We haven't seen tariffs this high for about 100 years. And it all depends, a lot of it depends on how other countries react. So will other countries slap up tariff walls in response? If that happens, it's going to be, obviously not good. But one thing we do know is markets hate uncertainty. And they also hate when confidence has been hit, as it has at the moment. So I think there's probably more falls to come in the share market, but we just don't know because we haven't been here before.
Okay, so everyone is sort of anticipating it's going to fall further. How much further, we don't know. But as we know with all things, there's a flip side. Reserve Bank will likely cut interest rates more significantly this year.
Yeah, that's right. So there's certainly some positives here. So firstly, Australians should enjoy cheaper imported goods. So, China and other Asian nations have been hit with whopping tariffs from the US. And what this means is that they're going to have surplus goods to sell into countries like Australia. So that should reduce imported inflation, which will help the RBA. The RBA should also cut interest rates in response to the financial market meltdown and also the prospect of lower global growth and Australian growth. So that's obviously great news if you're a mortgage holder, and financial markets are tipping 4 more rate cuts this calendar year.
Okay, but then, Lisa, I know that you've got kids. I mean, I hope you've got deep pockets because they ain't going to be able to afford to get onto the property market without you, particularly when we hear this could send prices through the roof.
Yeah, that's a big worry. So, obviously this depends on what side of the equation you're on, but lower interest rates combined with investors likely to ditch shares for property means that we're likely to get another spike in house prices. Now, that's obviously good news if you're a holder of investment property, but it's terrible if you care about housing affordability. I myself, I've got 2 teenage kids, so I'd rather not see house prices become even more unaffordable than they are already.
Hey, do you think that Trump is thinking, yikes, I've got this so wrong, or is it part of his grand plan?
Look, honestly, who knows what President Trump is thinking? Look, certainly he intended to cause some sort of ructions, but I'm not sure if he expected it to be this brutal. And I think he will actually get a bit of comeuppance in the US because obviously wealthy Americans are going to be very unhappy that their share portfolios and their assets have been hammered. And also, working class Americans are going to rock up to their Walmart and they're going to find that all Chinese imports have suddenly gone up in price. And I don't think they're going to be too happy about it.
So the big question is, where does it end?
Well, that's the million-dollar question. To be honest, I could pretend I know the answer to that, but I don't. It's really how long's a piece of string? We don't know how this is going to play out, but it should be interesting.
Yeah, well, look, Donald Trump said that this would be historic, and no matter how you look at it, he is not wrong. Appreciate your time, Lee. Thank you.
Thanks, Ellie.